let's shift gears to talk about earnings. Microsoft yesterday surpassing that $1 trillion market cap, just a tad there. It is come back down since, but this coming on the back of very strong earnings. Cloud continuing to be the big driver for the company. Their revenue on the Azure front up 73% there. Tesla, a different story here. We've seen the stock there under pressure on the back of posting a $702 million loss in the quarter. To break down all the numbers for us, Scott Gamm here on the couch. And so let's start with the good news, shall we, with Microsoft. It's trading a little lower than it was in after hours yesterday, but still strong numbers coming out in cloud, continuing to push the numbers up to the upside.
Yeah, and the stock hit $1 trillion just a few moments ago. It's now a little bit below that threshold. And Microsoft has never hit $1 trillion before. Back last year, the first two companies to hit $1 trillion in market cap were Apple and Amazon. Those two companies are still below $1 trillion. But yes, Azure continues to be the bright spot for Microsoft. 73% revenue growth there. A couple of quarters ago, revenue growth was closer to 100%. So I guess you could say the growth is slowing a little bit. But this is an incredible competitor to AWS, Amazon Web Services, which is the big player in the cloud space. We'll, of course, hear from Amazon after the close today.
What's so funny about Microsoft, Scott, right now is that it doesn't, if it's fair to say, for a company that is the #1 company by market cap right now, and for a moment, they're $1 trillion market cap, it still feels to me kind of like an unsexy story, or at least that's how the business press, including us, treat it. You talk more about Apple, you talk more about Amazon, but maybe that is a good thing if you're Microsoft. Maybe you like that that's your story right now. In fact, recently on the final round, we had a guest talking about boring stocks and that can be okay. I mean, how do you see the narrative around Microsoft these days?
Well, I think that's because maybe Microsoft doesn't have as many popular consumer-facing products. I mean, obviously Windows,
and they're bigger on the enterprise
we're
front
not
as well.
all carrying around a Microsoft phone, right? Yes, and the enterprise business is really where Microsoft is making their money. And with Amazon, yes, they have cloud, but everyone knows Amazon for the retail business.
Sure. And I don't want to not talk about Tesla because of that damning Wedbush analyst note there saying basically it's like the Twilight Zone and you're supposed to magically expect profitability and demand to just come back to Tesla. Yeah. What are your thoughts on them?
Well, I mean, is this really a surprise that Tesla is
he
this
makes
sort
a lot of promises,
uncharted territory? Now, the thing with Tesla, though, is they kind of warned that profit would be a problem this quarter. But the earnings per share, at least the loss per share, of $2.90, analysts were expecting a loss of 69 cents. So I guess you could argue what was going on in the analyst community that they didn't really expect.
Right.
I think this note, though, from Wedbush is a surprise, though, right? Because Dan Ives has long been a Tesla bull. Now he's coming out and saying essentially that, I'm throwing in the towel here.
Well, clearly he was off the reservation by being a bull on
exactly
Tesla.
Right.
I mean, I think that's sort of the heart of the issue. But look, you have this sort of erratic CEO, Elon Musk. I mean, yes, he's a visionary, but as an investor, you don't really know what to do with him. And look, the SEC doesn't know what to do with him either. So if they can't figure it out, how can the average investor or your money manager figure it out?
And that's really unfortunate because I was hoping to get into robo-taxis by the end of this year. So I guess I'll have to wait on that.
Supposedly next year, according to Elon. Scott, while we have you, just briefly, let's talk about Facebook a little bit. Facebook right now up 6%. And it's interesting because when Facebook earnings came out yesterday, in the first few minutes, everyone said, oh no, Facebook disclosing we're expecting a $3 billion fine. And yet, I guess investors, still as bullish as ever. And I like hammering this point home because the amount to which we discuss the scandals and kind of all the hand-wringing over the scandals. But you know what? Look at the stock and look how investors feel.
Well, and I think that's a great point because that speaks to how the market interprets various factors. So last year, perhaps things got too negative, but right now, maybe things are a little bit too positive. So it's always kind of somewhere in the middle, right? I think Facebook is not out of the woods yet, and that $3 billion fine that they kind of accounted for or setting money aside, I've read that the fine could end up being as high as $5 billion. So clearly they can afford it. They have $42 billion in cash on the balance sheet. So it's such a blip on the radar for them. But the bigger story with Facebook is the fact that clearly advertisers have stuck with the company through all these data privacy concerns.
Got to keep that in mind. And I think we're about to talk more about that Facebook fine. Scott, thank you so much.
Thank you.